Ruthie from FS Securities. Like every Monday morning, I give you a broadcast about what happened over the last couple of weeks. And from our indicators, fundamental and technical, we try to forecast what is likely to happen the next week or two. If you like the presentation, please send us some feedback. And by the way, FS Securities is a stockbroking firm on the Gold Coast in Queensland, Australia. Over the full week and from around the globe, we start with the Dow Jones Industrial Average Index, which makes up the top 30 US stocks, which had weekly increase of 0.5%, that is down 129 points. However, when you combined the last 2 weeks together, we actually were up 0.7%, and that's 194 points. As a matter of interest, over the last 7 weeks, last week was the first week on the Dow that we've seen a down week. That's the first week that the market went down in 7 weeks. On the commodities, gold closed on Saturday at 1,462, that's US per ounce, down $7.20, that's per ounce per week. And if you look at the last 2 weeks, as a matter of interest, gold was up $1.70 or up 0.1%. Silver over the last week was 0.15% or 3 cents higher and closed on Saturday at $16.96 US per ounce. West Texas crude oil was flat at $57.93 US per barrel. And as a matter of interest, for those people who follow iron ore, which of course is important for companies such as BHP, Rio and Fortescue, was actually trading at $88.08, that's per ton US. That's a weekly rise of $7.97 per ton. The currency was flat. The Australian dollar would give you 67.86 US, 61.57 euro cents, 52.9 British pence, and 106 New Zealand. And for those people who follow Bitcoin, Bitcoin was trading at 7,086 US. That is actually down $520 US over the full week. And that converts to approximately 10,434 Australian dollars, down 1,452 Australian dollars over the full week. That's a major drop. Well, at the closing bell and over the full week, our market was down 84 points or 1.2% and closed at 6,709. Over the full 2 weeks, the ASX 200 was 0.2% lower. And as a matter of interest, the ASX 200 index, our market gauge, is made up to a greater extent by the financial and the material sectors. When both sectors are up or down strongly, the market reacts accordingly. Last week, the financial sector was down 3. And if you look at the last 2 weeks combined, the market actually was down 3.9% over the last 2 weeks. And the material sector was down 0.4% over last week, 0.5% lower over the last 2 weeks. Looking across all sectors, the best sector last week from our technical analysis, consumer discretionary was up 1.3%, followed by consumer staples, also up by 1.3%. The worst sector was financials, down 3%, followed by financial ex property, which was also down by 3%. Across the top stocks, the best performing stock over the full week, some of the major companies, Rio was up 0.6%, followed by Woolworths, up 0.3%. Worst performing stocks, Westpac, down nearly 7%. But remember, Westpac last week presented its dividends, and also there is a major from the Royal Commission, a very big inquiry that can end up with all the banks suffering penalties, heavy penalties. And NAB was down nearly 5%. Well, what does it mean for our local market, you may ask? The ASX 200 futures, if any indication, is showing that the market most likely will open this morning 12 points higher. And by the way, if you want a copy of those slides that you can see at the moment, all you have to do is ring us up and let us know that you want them. It gives you a good perspective about what happened over last week. In combination, when you combine the 2 weeks together, at least you can start to study the trend. Looking at the volume, we believe the volume is an important indicator because it's a leading indicator. On the right hand side, you see the weekly advances over declines, and last week we've had the declines exceeding the advances. And you look at the daily, last Friday it was an up day. However, look at the volume. When the volume is lower than usual and you've seen the advances greater than the declines, that's not really a good sign. We like to see a major ratio between the advances and the decline with an increase in volume. However, when you can look at the weekly, you straight away can determine that last week the advances were much lower than the declines. Again, that gives you some perspective about how the market was heading. Now, looking at our mechanical system, which we designed over the last 20 years, we look at what happened the last 4 weeks, and you can see the American market was bullish, strongly bullish 3 weeks ago. However, last week, the very last week, you can see that the strong bull has actually started to decline with more neutral, especially for the conservative traders. Gold continues to be lower with the bearish market, as you can see here, for the aggressive trader and the very aggressive trader. We continue to have that perspective for this coming week as well. However, crude oil, that's the West Texas crude oil, started to be strongly bullish. Okay, 2-3 weeks ago was bullish just for the very aggressive. However, now we can see the aggressive as well as the very aggressive. We've got one more bullish signal. Wheat, if you're interested in trading commodities, of course this can be given to you if you want it. All you have to do is call us and we'll give it to you. But wheat, if you're trading commodities, well, obviously wheat is something that we might be interested in trading this week. Soybeans, for those people who follow what's happening between the US and China, because as you probably know that soybean is a major contributor to the export from the United States to China. And of course, you can see it's a lot more bearish last week than the week before. So that tells you again the sentiment about where the China-US discussion about the trade sanctions and the tariffs is heading. Well, you know that on the 15th of December, America is likely to impose more tariffs on China. And of course, if that happens, China would probably retaliate. And of course, the fact that America, through the Congress, and the American president is likely to sign the bill to condemning China in Hong Kong because of what's happening in Hong Kong. And that of course doesn't please China, and again China will probably find a way to retaliate. When you look at the Australian dollar, we continue to be bearish for the very aggressive trader. And the pound, and by the way, we are trading the pound at the moment. We have a position in the pound, and we are bullish on the pound versus the US. However, on Friday we saw that our pound, the British pound, dropped and caused a bit of decline in our portfolio. There is some losses that we're incurring, but we're going to hold on to that position based on the expectation that it may turn around and go up on the upside. Now, looking at the chart, as I mentioned to you, this is the weekly. The red candle here is showing you that for the last 7 weeks, it's the first week that the market in America closed lower. So that's a signal about where the market in America is heading. We had a very big rise. If you look at how many weeks we've had up and down, but that's an all-time high, guys. So that's really a record high. And last week we've seen a decline, mainly because maybe that the investors are seeing that The US-China discussion is not heading as expected with phase one, which was expected to take place early this month, or at least in December. Well, it looks like it may drag into 2020. Okay, our mechanical system, we're looking at our sectors. We can see a lot more reddish cells. That's the last week here on the left hand side. You can see that the last 2 weeks prior to last week we've seen more bull signals, but that is starting to turn into more bearish. The all ordinary, the top 300, turned from bullish, very strongly bullish into bearish. Consumer discretionary was the strongest, as I mentioned earlier, the strongest sector, as well as the consumer staples. The financials continues to be bearish, and so is gold. You can see here gold for the last 3 weeks has been strongly bearish. Materials, which of course is BHP and so on, and Rio and Fortescue, you've got the materials neutral after being bullish for several weeks. Okay, this is our ASX 200 chart. Last week was very strongly bearish. However, it didn't close on the low end of the week, which is slightly better than when you see a candle closing at the end of the week at the very lowest point. That's probably an indication that it may continue to be bearish for the following week. So we might see that today, according to the futures, the market may open higher today. That's Monday. But we might want to see what's going to happen for the rest of the week. A lot of expectation coming from overseas as well. That's Wednesday and Thursday. That's the daily chart on the right hand side. You can see that we've lost more than 1% each of those days, and the fact that on Friday the market closed higher, still well below when you can see that it has 6,810 and finish around the 6,700. That's nearly 100 points lower, more than 1%. So we might see a recovery this week, or at least early in the week, and then obviously we'll have to wait and see what may likely happen the rest of the week, considering that every sector has given us some indication. Looking at here, this is the weekly. That's the weekly forecast that we've given you on Saturday. And if you look at what happened, what we forecast on Wednesday, Thursday and Friday mornings, you can see we will continue to be bearish on ANZ. We continue to be bearish on the bank NAB. Newcrest Mine continue to be bearish. So we're pretty right in our prediction during the week about what may likely happen. And as you can see at the end of the week, the weekly chart is telling us bearish for the bank, ANZ, NAB, Westpac. And you can see here all these indicators, and depends on what type of trader or investor you are. So we don't treat all our clients the same way. Depends whether you are an investor, a long-term or very aggressive trader. That's actually more or less 2 or 3 times, 4 times a week you're trading, especially with leveraged products such as CFD and options. Again, if you want a copy of these slides, all you have to do is call us. Now finally, we like to look at volume, and now this is actually the weekly volume. We can see that Qantas over the full week, the average volume over 1 week was 33 million shares exchanging hands. And you can see here that last week Qantas had a very strong volume. A lot more people were interested to get into Qantas, and we believe the market has gone up in the price, and that means higher volume and higher price. That's a very good indication. Aristocrat Leisure also had a good reasonable volume, 134%. ANZ on the downside, 131% extra volume above the average volume over 50 weeks. For those speculators, we've got here companies called Maca, we need to actually be wary that some of these companies may or may not be able to trade in CFDs, that's leveraged products. So unless they are, then obviously we're not interested. Well, of course, so we went into a company last week for one of our clients. We bought the shares for medical technology, MVL, and the market went up by 10% on Friday. And we have one particular client who actually put a couple of $1,000 into that particular trade, and they are nearly 8-9% higher in net performance. So again, if you've got money in your bank, you may want to trade some of those companies. On the speculative side, remember speculative side, because we don't guarantee that these companies will always do well. However, when we see the volume is increasing and the price is increasing with some of those stocks, it gives us an indication something is really happening, and it may be worthwhile to investigate it and do some research, put some paper out and send it out to our clients and prospective clients. And that is all from us here at FS Securities. Remember to trade safely and wisely. Remember, everything we said today is actually for this general advice only. We don't know your financial circumstances, and therefore we want to tell you that you need to be cautious. There is no guarantee in any financial instrument that you may trade. And by the way, for those people who want to know what's happening with our CFD trading, last week wasn't a good week. I told you on Friday we lost money on the British pound, and that actually brought our return. At one stage, 3-4 weeks ago, we nearly had 90% profit. It dropped a week later to about 70%, and at the moment we're sitting on approximately 59% profit on our return. So we're still in profit mode, but of course, you know, this is actually speculative trading, and of course sometimes it goes up and sometimes it goes down. But you need to have a strategy, and you need to have trading stop losses to be able to determine at what point you need to get out of the market. So anyway, have a good week, and we speak to you again.